Hi, welcome to this week's edition of the Weekly Wrap Up. The week gone by was a strong one for the Indian markets overall, the indices representing the frontline names, as well as small and mid caps rising by about 4 to 4.2%. When gauged from a year ago, the small cap index is down by about 2%, while the large and mid cap indices are high by about 6 to 7%. When compared to their 52-week highs, small and mid caps are down by about 8 to 10%, while large caps are down by about 6.5%. Key developments in the week gone by include that of the ECB, which is the European Central Bank, hiking rates for the first time in 11 years. The ECB raised benchmark rates, deposit rates by about 50 basis points, which is higher than its own guidance of 25 basis points hike, which it had given earlier. Citing that price pressure is spreading across more and more sectors, the ECB expects inflation to remain undesirably high for some time, listing factors like higher food, energy, and wage costs as the key reasons for high inflation. This adds to the overall woes of the Western world. Coming to the key results announced over the past few days. HUL surprised the markets with a volume growth of about 6%, combined with price interventions allowing the company to grow its top line by a fifth for the quarter ended June 2022. Gross margins for the quarter contracted by about 3%, but cost-cutting efforts allowed the company to manage the EBITDA cut by about 1.1% only. The company has called out inflation as a short-term concern, but expects the situation to improve as and when the situation stabilizes. Companies from the building material, FMEG, and wire and cable space also announced results in the week gone by. Kajaria Ceramics, for example, which is the largest name in the tile space and ceramic space, announced numbers this week. Kajara's numbers came in above expectations with a volume growth of 53%, albeit on a low base. But with the energy costs being quite high in this business, the inflationary environment in power and fuel costs did impact the results, but EBITDA margins marginally improved on a QoQ basis, which gives a sense of its hold on the market. The company stuck to its guidance of growing volumes by 15 to 20% for the coming year, but has called out uncertainty with regards to margins on account of volatile gas prices and the challenges also when it comes to gas availability for the sector. Coming to Polycab and Havels, which are named from the FMEG and wire and cable space, they both the companies reported decent numbers as well, but did report pressure on margins due to higher input costs. Now, while input costs input costs being volatile, both the companies have called out for a weakness in demand in the coming quarter on the back of declining prices leading to channel inventory being scaled down. They expect demand to be pick up in the second half of the year. Now, coming to the discussion on the IT names. So, IT stocks have been volatile post the results that were announced. Key takeaways from the results were that while growth seems to be intact for the full year, the narratives around demand, business growth beyond the year are getting tough to gauge as the slowdown pressures are getting more and more pronounced in the Western markets. Companies have mentioned that the interaction with customers don't yet factor them in as yet. However, in our experience, such narratives can change quickly and it would be prudent to take caution. This, combined with higher attrition levels, which are expected to improve only in the second half of the year, is expected to put pressure on margins. With the way the stocks have moved post the results, it does seem that the market is circumspect about the future. All of these developments have brought down valuations of companies considerably in the last few quarters, as can be seen from the adjacent chart. The chart shows the 1 year forward multiples for large cap IT names. As we can see, barring the top two players, that is Infosys and TCS, valuations for companies like Tech Mahindra, Wipro, and HCL Tech have come back down to what they were at the pre-COVID level. Valuations for TCS and Infosys, on the other hand, while having corrected considerably from their peaks, are still above the long-term averages, as well as the band that they were trading in during the pre-COVID era. No doubt, this speaks a lot about how the market views these names versus their other large cap peers. But if growth and narratives would differ, from the market expectation in the coming quarters, we would not be surprised to see some more derating in these names as well. As for the week going ahead, it will be action packed, given that index heavyweights such as Reliance, Infosys, ICICI Bank, and Kotak Mahindra Bank will be coming out with results today and over the weekend. So that needs to be seen in the first half of next week. That's it from us for this week. Have a good weekend.